Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menasce. Today is the first in a four-part mini-series on industrial. And on today's show, we're performing a deep dive into the investment thesis for industrial properties across the southeastern United States. The folks at Marcus Millichap have published 36 new industrial submarket reports for the second quarter of 2026. If you've been following the macro trends, you'll know that the industrial sector has been navigating a massive wave of new supply that hit the market between 2019 and 2024. But as we sit here in the second quarter of 2026, that narrative is shifting from oversupply to rebalancing and infrastructure-led growth. The data across the major southeast hubs, including Atlanta, Miami, Fort Lauderdale, Jacksonville, Orlando, and Tampa, suggests that while vacancy remains elevated compared to the record lows of a few years ago, the fundamentals for long-term investors are remarkably resilient. Let's start with the big picture in Atlanta. The investment thesis here is anchored in the infrastructure and steady demographic tailwinds. Atlanta is currently seeing population growth of about 1.3% annually, which continues to fuel the need for last-mile logistics and distribution. Even though vacancy is projected to hit 7.6%, the market is benefiting from Georgia's business-friendly tax climate and a massive $4.5 billion 10-year expansion of the ports of Savannah and Brunswick. We're seeing rent momentum turn positive for the first time since 2022, and for investors, the focus is squarely on the Interstate 85 and Interstate 75 corridors where cargo connectivity is the strongest. Moving south into Florida, we see a more nuanced story. In Fort Lauderdale, the star of the show is the small bay warehouse. Big box leasing has shown some caution, and leasing for properties under 50,000 square feet hit a record of 2.8 million square feet in 2025. This is driven by incredible consumer spending, with retail sales growth in Fort Lauderdale leading all major markets at 6.7%. Now, if you're looking for a defensive play, these multi-tenant infill assets in central Broward County are particularly attractive because vacancy in this segment remains below 6%, even as larger properties struggle with 9% vacancy. Let's look at Miami-Dade County, which is truly cementing its role as a global logistics hub. Despite some negative absorption as tenants resize, air freight cargo at Miami International Airport hit 3.5 million tons in 2025, and what's fascinating for the future is that Florida was selected for a federal pilot program in March of 2026 to test drone cargo use cases. That could revolutionize demand for vertiport infrastructure near airports. Now, from an investment perspective, small bay assets between $1 and $10 million are seeing record trade volumes, with investors spreading their search into the Miami Lakes and Sweetwater as infrastructure improves. Further up the coast in Jacksonville, the thesis is one of a supply relief valve. After 3 years of massive deliveries, construction in Jacksonville is expected to slow to its lowest level since 2018. The pullback in new inventory is exactly what the market needs to digest the current 9.7% vacancy. We're seeing significant re-engagement of institutional capital in deals above $20 million, and particularly near the Port of Jacksonville and the Southside submarket where the population growth remains robust. We saw rents soften in 2025, but we're now seeing it grow again, with asking rents projected to reach $9.50 a square foot by the end of this year. In Central Florida, the Orlando market is showing similar patterns of development. After delivering over 20 million square feet in 4 years, the delivery pace for this year will be the slowest in a decade. The investment momentum here is concentrated in big box distribution near Orlando International Airport, specifically where major regional thoroughfares like the Turnpike and SR 528 converge. Older product is seeing some move-outs, and newer small bay industrial remains stable with vacancy around 5%. And then finally, let's look at the Tampa-St. Pete metro. This market is undergoing a gradual recovery characterized by record small bay leasing, reached nearly 4 million square feet in 2025. Investors are particularly active in the Sarasota-Bradenton area and East Hillsborough, where container traffic through the Port of Tampa rose 2% even as air cargo slowed down. The highlight for 2026 is the steep drop in completions. For instance, Plant City will see no major deliveries this year after a massive multi-year building boom. The supply constraint is allowing vacancy to stabilize right now at about 8%, which, by the way, is high, but it's pretty close to the national average. So what is the overarching investment thesis for the Southeast in the second half of this year? First, you want to bet on small bay. In almost every metro from Fort Lauderdale to Tampa, the sub 50,000 square foot segment is outperforming the big box sector in terms of occupancy and rent resilience. Second, you want to follow the infrastructure, whether it's the $4.5 billion expansion in Georgia, the air cargo in Miami, or the new cranes arriving at the port of Tampa. Industrial value is increasingly tied to multimodal connectivity. And then third, you're going to have to be patient on the supply side. We're finally seeing the supply wave from the early 2000s break down a bit, with construction hitting decade lows in markets like Jacksonville and Tampa. That might create a window for value-add strategies where investors can upgrade older facilities or subdivide the space to meet surging demand for smaller tenants. The Southeast is no longer just about speculative growth, it's about structural importance to the global supply chain. And as you look at your portfolio this quarter, the data suggests that while the easy money of 2021 is gone, the foundational demand for the Southeast industrial real estate market is pretty strong. As you think about that, have an awesome rest of your day. Go make some great things happen. And we'll talk to you again tomorrow.